Thanks for joining me again. Fremont has reported that from its 3D seismic program, 9 new shallow targets have been identified with 3 wells earmarked first up. Your ASX announcement builds a pretty good case for why these wells are different and why you were chasing production from the Pierre Shale formation. That's all very clear. But what's your strategy here?
Well, thanks, Alex. Our strategy is fairly simple. Low cost, low risk, high value oil production and cash flow. We're basically duplicating the success that Pine Ridge had from 2008 to 2011 when they drilled 21 successful Pierre wells in a row using high definition 3D seismic to identify the fracture networks in the Pierre. And in the view of our geologists, our 2019 seismic program resulted in some of the best Pierre targets she's seen in the field. And so for us now, it's really all about building the revenue base as cost effectively as possible using the existing sales channel we have with Suncor. And don't forget, there are wells in the field that have produced up to 1 million barrels of oil, and there are more of these around. It's all about capturing the revenue as cost effectively as we can and realizing the best ROI possible.
Okay, Tim, so in terms of return on investment, how do you measure that with the last 2 wells you've drilled?
In a number of ways. Both of the last 2 wells are producers, and you'll see fairly soon that the Vespucci well will deliver a big boost to monthly oil production, and that's the near-term focus. But what we've been able to demonstrate with the Niobrara formation is how similar the Florence field is to the Wattenberg. The results of these 2 Niobrara wells have certainly increased the level of interest in the field, and while there's not an immediate tangible outcome in terms of dollars and cents, there is plenty of interest with some of the bigger shale producers who are eager to explore further. And this provides us with more optionality to develop the field. And as well, both these wells flowed large amounts of gas, and building our gas inventory is critical as we move towards securing a binding gas offtake agreement.
And just on that, is it fair to say it's been a long time coming? And how is it progressing?
Sure, it's fair, and I understand the frustration. As we've said, we're not chasing a letter of intent or something that's non-binding. We'll be delivering something that's bankable and that allows us to develop this second revenue stream in fairly short order. There's a lot of demand for gas in this part of the U.S., and we certainly intend to deliver an outcome in the near term.
All right, Tim, well, we're really looking forward to seeing how that develops over the near term, as you mentioned. And again, thanks very much for joining me today.
Thank you, Alex.